Welcome back. CNBC's quarterly stock report showing more than half of the participants are most worried about inflation heading into 2022. But our Christina Partsinevelos is looking at how those fears may be overblown. Too much concern, Christina?
Yeah, well, we say we are worried about inflation. Our surveys show it. We talk about it all the time on TV. And yet our Google habits say otherwise, even as we are faced with the fastest price increases in decades. Research, according to DataTrack, notes that Google searches for words like cheap, coupon, and discount are actually declining. So more specifically, searches for the word cheap hit their peak at the start of the pandemic in March 2020, and then you saw similar patterns in March 2021. But since then, volumes for cheap have come down almost 50%. Even holiday shopping couldn't get consumers interested in finding lower price gift options. And of course, this bodes really well for corporate earnings, and many companies are, of course, taking advantage. Egg producer Cal-Maine said their egg prices increased 12% year over year. Chipotle said that they increased their menu prices almost 4% just this past summer alone. And consumers seem to be taking these price increases in stride, with McDonald's CEO pointing out price hikes have been, quote, pretty well received by customers. And that contributes to profits. U.S. corporations, aside from those in finance, posted their fattest margins since 1950. Goldman Sachs economists warned in a recent note that, quote, the inflation overshoot will likely get worse before it gets better. A statement that's reflected in the slew of companies who warned about further price hikes next year, like Kraft Heinz, Mondelez, Campbell's Soup, to offset increased costs. Why are we so willing to stomach these price hikes, though? Economists say it has to do with wage growth, although real earnings, wage growth less inflation, turned negative in the last 2 months, which means we might start to notice the pinch going forward. Scott?